traders, Todd Gordon at tradinganalysis.com. It's Wednesday, May 7th, and I want to take a look at the major stock indexes. Also want to look at bonds, okay? So let's start with an overlay from kind of the top in the market. I'm looking at a percent change overlay here from the March 6th high. And let's go to the full screen, and you're going to see the relative performance of the stock indexes against that high. The Dow and the S&P, kind of the big cap established companies are pushing through the highs, but again, you have these high beta tech, small caps not confirming. And this kind of push and pull is creating a lot of uncertainty in the market. Does the bull market continue higher? And can it do so without these, without the tech and the small cap? Or are these, are the more established Dow and S&Ps going to roll over? So what I want to do is let's move over to a level in the NASDAQ that I want to focus on. We are tracking a bearish wave count in the NASDAQ 100 cash. Okay, so let me go out to the full screen and show you the level specifically. It's 35.56 in the NASDAQ cash. If we hold below that, and specifically into this Fibonacci resistance around 35.50, then the downside hope in the NASDAQ is still alive. Okay, but if we break above 35.56, then I think this whole push down might be a little bit of a bear trap, okay? And one of the markets that I think is kind of poised to take advantage of this false break to the downside is actually not in the stock indexes. I love selling bonds. I want to be short bonds. Okay, so let me just go over to my 30-year bond chart here. I want to go to the yellow count. Okay, and here's what we're looking at, okay? If we get inside of the daily chart here, there's a wall, just a massive thick wall full of Fibonacci between 135 and 140 up here in 30-year bonds. Most importantly though, you see this little structure since the March 7th low, 1, 2, 3, 4, 5. That's what you call an ending diagonal. Okay, that happens at the last wave of an ABC move or a 1, 2, 3, 4, 5 move, which this clearly isn't. It's an ABC. So I'm thinking that this might be the start of a new downtrend in bonds, okay? Good way to take advantage of it would be instrument overlay. I just love to trade the TLT. Nice ETF to take advantage. Just a real kind of quick and dirty way that I like to figure out the equivalent price. Just overlay it. Okay, just kind of scrunch it up here, get it on top. It's not going to be perfect because the TLT is a mix between the 10 and 30-year bonds. It's approximately sell into 112 to 114. I'd look to establish that via an options position for the downside move. And again, it's contingent on that NASDAQ breaking the 35.56 level. So all these markets are playing together. Okay, so I want to let you know we are doing a webinar this coming Tuesday. Okay, it's going to be May 13th, and we're going to be covering what we see as a massive volatility explosion. Okay, there's a lot of back and forth. There's a lot of kind of disagreements between all these markets. We just went over a few, and we're going to take you through exactly how to position yourselves in your trading accounts and in your portfolios. I'm going to show you the trading strategies that I'm using right now to get ready for this. I think it's going to be a really busy spring and possibly even a very volatile trading summer. So join us. We'll flip you over to that page to get you signed up for that webinar May 13th, 7 o'clock. See you there, guys.